Welcome back to Cheddar Movers, everyone. Shares of Facebook tumbling after reporting earnings after the bell yesterday. Despite beating on top and bottom lines, Facebook reported a 51% rise in expenses compared to 2018. For more on Facebook and other big reports that came out, we're joined by Seth Denson, co-founder and chief strategist at GDP Advisors. Seth, great to speak with you once again here. Let's dive right in. CEO Mark Zuckerberg saying that privacy will be a primary focus for Facebook in 2020. How does that sentiment sound to investors?
Well, I think it sounds cheap, and it sounds cheap because while he may say privacy is important, the actions speak louder. And Facebook's got an optics issue here. You've got, Ring coming out and announcing that effectively they've been selling off data or providing data to Facebook on a regular basis. Facebook apparently has a profile on people that don't even have a Facebook profile, right? This has got users nervous, and while users are still up, investors are looking a different way, and you've got some strong regulatory headwinds that might be headed Facebook's way as we continue to move into an election season, and understand that Facebook, a lot of revenue comes from political ads, and so is Congress going to get involved in this, and are they going to do something as we move into the election season?
Yeah, I mean, I think for all of these companies, whether or not they get a substantial amount of revenue from political ads varies, right? I mean, that's why Twitter pulled out of it. That's why Google has stopped doing super targeted version of this. I mean, Facebook is kind of sort of towing the line here. But I think the question still remains, and you brought this up as well, if you still have more users joining the platform and their family of apps of users, I mean, that number still continues to grow now, right, to over 2.2 billion people a month across all the platforms. I mean, the business, the foundation is still really, really strong. And this is really the first time we've seen investors get a little shaken up by the numbers, despite all the optics that you just mentioned.
Well, that's right. I mean, listen, Facebook is still a market. People are still using it regularly. Again, adding users on a regular basis, and there's certain areas of the market sector that's going to say, hey, there's an opportunity to advertise here. I think again, the squeamish side of investors, I think, are those that are looking at the optics side of things, and recognizing that while you do have Twitter and some of these others say, hey, we're getting out of the political game, Facebook didn't come out and say that. And maybe they're towing the line, but maybe they're not, because they've been very vague on what will and won't be allowed. And I think that's got some investors just a little bit nervous.
But what's the net takeaway by staying in political ads if you're Facebook? I mean, you're hiring people to essentially formulate war rooms, and so there's the increased headcount that you need on one side, but then additionally, it's such a minuscule part of the overall advertising revenue that they bring in. Essentially, you're just offsetting.
Well, that's right. Matter of fact, you may be going the other way, right? And I think that's what investors are looking at as well. If you start getting too top heavy, where your spread per employee reduces, well, that's a significant impact to your overall EBITDA, and I think investors are starting to recognize that.
Let's move over to Microsoft. Another great story about the cloud business there for this company that has really been in this $1 trillion club the longest over the past year. Shares up over 2% right now. Azure growth 63%. That is a bit of a slowdown from past quarters where we had seen it near 100% growth year over year. Let's talk about that specifically. How much stronger of a business and how much longer of a business does Azure have to grow at that strong rate of growth?
Well, I think they've got a lot of room to grow there, and I think there's a lot of opportunity. Obviously, Azure getting the JEDI contract from the Department of Defense, that's going to be a huge growth opportunity for Microsoft as they go forward. Listen, I love organizations like Microsoft and some of these that have been long-standing organizations, especially when we start to see a volatile market like we have today, right? I mean, we kind of adopt the Buffett theory here, right? If you're not willing to own it for 10 years, you probably shouldn't own it for 10 minutes. And I think that right now in the market, there's a lot of this short-term opportunity gain movement, but Microsoft is one of those foundational pillars of our financial system, and they're continuing to improve. I mean, will we see the market expanse of 20 and 30 and 40% year over year? Probably not on a group like that. But listen, they are a steady, large cap organization that's continually doing well. And I like to see these pillars of our overall financial system continue to perform.
How much of the JEDI contract plays into their broader strategy to continue positioning themselves, at least, as a leader in cloud, even if they are not by the numbers game and the accounts game, the leader of that particular sector?
Yeah, I think there's a lot of market share growth opportunity there. Again, you think about Amazon and AWS and what's going on there as kind of a leader in that space, but Microsoft is saying, hey, don't forget about us. we can do a lot of things here, and we're going to continue to push after them. So I think there's some market grab opportunity there for Microsoft. I think from we've talked about optics this morning. From an optics perspective, when the Department of Defense is saying, hey, we're going with Microsoft, that's good. That's good from an optics perspective to say if the Department of Defense trusts us with their cloud-based services, perhaps you should too.
Just quickly, though, does that limit some of their overseas potential? If you're working with the public sector here in the U.S., does that then limit who you can work with outside of the U.S. as well, or make it less attractive for other countries to partner with Microsoft in that effort?
I don't think so. I think that as you start to think about the security protocols and some things there, I think that Microsoft is a well-established organization globally that I think that they're going to be okay from that perspective.
All right, let's talk about Amazon. What are you expecting here for results coming in after the bell?
Well, man, their third quarter results were great, and I will tell you that if my household were any indicator of their fourth quarter earnings and our Christmas season, they should be pretty good. The Densons did their part, let's just say that. So no, I think that we're going to see some really strong earnings coming out after the bell. Amazon's doing some really powerful things, and I think that we may see this fourth quarter be one of their best ones yet.
Seth Denson, thanks so much for being on with us.
Thanks for having me.